All right, switching gears here, Wall Street is on earnings watch today with big names like Alphabet and Beyond Meat set to report after the bell. Joining us now for a preview of those earnings is T.G. Watkins, Director of Stocks at Simpler Trading. TG, great to have you here with us today. Expectations around the China trade war remain positive. We're seeing a record-setting rally for the S&P 500 today. So before we get to earnings, do you think this rally is going to continue?
You know, so far it sure looks like it does. That is what I've been telling the people who subscribe and follow us. And I've been looking at some of the larger time frame charts, and they seem to be doing just fine. And now that we've had the market breaking out, I'd say things are doing pretty well, especially with kind of things with the trade war and whatnot being a little bit calmer and quieter. Looks like we're on pace for making new highs.
And let's switch it now over to the earnings coverage that we're going to continue to, of course, watch once this closing bell happens. But as a preview here for Alphabet, which of course is the #1 digital advertising company out there right now, how strong is the core business?
Well, the core business is doing great. I mean, the company as a whole is doing just fine. The stock is a representation of that. The only thing I'd be concerned about is just the actual stock pattern itself. It's at a triple high, and some of the things that it's done in the past, I mean, Google has a tendency to do what we call in the stock trading business, buy the rumor and sell the news, meaning they run up to earnings, and then once the earnings are good, they just kind of drop it back down, and then they can get back in. So just be careful if you're an investor out there buying at these all-time highs going on a earnings news report like this.
Well, to that point, how much will Alphabet kind of have to prove its other streams of revenue that aren't advertising, like in its other bets category, for example, some of its more ambitious projects like Waymo, Google Fiber, even Wing, right? How much do you think investors are going to emphasize these other streams of revenue, given that advertising may potentially be slowing down?
Well, probably quite a bit. I mean, as you said, advertising slowing down. And when a company gets this big and they've been around for so long, they do need to diversify and they need to figure out where else they can make money and make that revenue. And I think that they're doing a good job having these other divisions and branches that are going to be up and coming and help carry the company forward.
And I know it's a little bit, of course, early on in this election cycle to talk about the impacts to these companies. But of course, we have been talking about them because big tech has been such a big focus of these presidential hopefuls like Senator Elizabeth Warren. Do you think at any point these companies will mention or at least reflect some of those concerns if investors have them in either the comments of these earnings reports or on the calls?
You know, that I can't address too much. I'm not so familiar with that. Mostly I look at the charts and they say they're doing all right. One thing we kind of look at as well, maybe Facebook. Facebook's chart isn't looking too hot. Zuckerberg has been in a lot of hearings and congressional hearings recently, and he's kind of catching flack from one side than the other. And so we're wondering if that's going to have some effect on the business and where they go forward, especially, as you said, coming into this new presidential race.
All right, let's switch gears now to Beyond Meat, also reporting earnings after the bell. It's lost about 60% of its value from its highs. What do the charts tell you about Beyond Meat? What should we be expecting?
Well, again, earnings are usually a surprise. They can kind of have a lot of manipulation that goes on, but the chart has been going down for quite some time. If anybody out there is familiar with some of the cannabis stocks that had their heyday, Tilray was one of them. It was a darling of the stock market for a while, went from 30 to 300, and now all the way back down to basically where it began. And we're wondering if Beyond Meat is going to be along the same lines. I think as a company and what they're doing as far as the plant-based food is great, but sometimes the stock doesn't always relate to what the company is doing, especially when it's been hyped up like that quite a bit.
Sure, and still, though, pretty impressive, $25 starting price, right, for their shares, and now still multiples of that. But with the pressures that are coming now from Impossible Foods, as slow as their growth is really through grocery stores and these chains, how much longer of a tail do you think there is for Beyond Meat to grow in terms of their stock price?
I think there's quite a bit. It takes time. I always talk to stocks as far as a ship, and a big ship, kind of like Beyond Meat, takes longer to turn. So when it's trying to change direction from going from a downtrend to a new uptrend, it's going to take some time. There will be a bit of an incubation period. So we're not going to miss out on anything, especially with this earnings report as far as the stock goes. Let it go down, let it kind of build that base, and we'll start to see when this thing starts to take off again. So we won't be able to miss it.
Can investors or even Beyond Meat as a company maybe learn from how the longer standing food and beverage or restaurant companies like a McDonald's have been shifting, investing more in technology, trying to be more forward thinking? Can they take any learnings from the existing incumbent players?
Oh, I'm sure. Why not? I mean, McDonald's is doing great as a company as a whole, and they've got all sorts of technology. Now, I'd imagine Beyond Meat, as them being a new startup, they are going to be starting up with all of the latest technology because they know what they're up against and what their competition is, and they don't have room to waste, and they don't have room to waste on expenses. And so, if they can find where they can save money and grow faster using technology, I would imagine they're going to be up on it on the latest.
All right, great stuff there, TJ. Thank you so much for breaking down all the stocks with us with the preview. TJ Watkins is Director of Stocks at Simpler Trading. Thanks again.
Great. Thank you.